Travis, thanks to higher interest rates, bonds, and in particular, U.S. Treasuries, are once again reliable income sources for investors. Last year, investors received nearly $900 billion in annual interest payments from the government.
$900 billion in interest.
Yeah.
Wow.
The number, though, is expected this year to grow over $1 trillion worth of interest going to investors. It's
wow.
big. Those are big numbers. 90% of treasuries now carry a coupon of 4% or more, which is quite a difference from just a couple of years ago.
It's a huge difference from a few years ago. Yeah, I mean, those are some wild numbers relative to recent history, Steve. But we have some more. In March alone of 2024, the Treasury Department paid out $89 billion in interest, just in March. Man. Think about this another way. That's $2 million per minute in interest payments for the month.
That's a lot of money. Just a lot of money.
And earning interest on higher yielding debt isn't a secret. I mean, investors have been pouring in. Last year, bond funds attracted $300 billion of inflows. So the secret's out.
Yeah.
People are allocating there. So far this year, they've attracted $191 billion of inflows. So on track to beat last year. So compared to stocks and the volatility that people feel, some people see tremendous value in bonds. It's all a matter of how they fit in your portfolio, though.
Yeah, Travis, concerns about the deficit and, of course, inflation is expected to keep yields from falling significantly, which would keep high demand for these fixed income securities that investors are searching for. And not just demand for treasuries, though, it's demand for grades of fixed income as well, other grades of fixed income as well, such as the corporate debt, structured credit like mortgage-backed securities and asset-based securities. You can pick up extra yield above treasuries in the right instruments, and so you just want to be thoughtful about the way you do this. So your fixed income portfolio can continue to provide the safety and the liquidity that an investor is going to need as they move forward to accomplish their goals.
You want to make sure it's still your bond portfolio. You're not venturing further out on the risk spectrum than you think you are.
Yes.
Because when you're venturing, beyond treasuries, Steve, you want to understand the quality of the debt that you're investing in. The extra yield that you're talking about comes with extra incremental risk in some form or fashion.
It does.
But there certainly are higher quality opportunities in both public and private markets. Or private credit, which
we talked about
talked about it last week. And a lot of that stems from the reduced lending we've seen from banks due to tighter regulation that's been put in place. So companies are increasingly tapping into alternate avenues of financing, and it's leading to a wide array of opportunities for investors if they're willing to look under the hood, right?
Yep.
Bottom line here, Steve, fixed income is more attractive than it has been in years, and based off the flows, investors are taking advantage of the opportunity.
They are, Travis. It's been great. I look forward to it next week.
Look forward to it as well.